At the end of every year, every business has to answer the big question. Did we actually make any money? Well, getting to that answer is like a journey. And today, we're going to explore the two main roads you can take there, using either the perpetual or the periodic inventory system. So here's our game plan. We'll kick things off with what it means to close the books. Then we'll journey down path 1, the perpetual system, and then path 2, the periodic system. We'll see where they come head to head in what I'm calling the trading account showdown, figure out how we get to our final profit, and then wrap it all up by talking about why all this actually matters. All right, let's step up to the starting line. When you hear accountants talk about closing the books, it's this big, important ritual at the end of the financial year. And it's not just about cleaning up paperwork, It's the official process for figuring out if the year was a win or a loss. And the main tool we use for this are closing transfers. Think of it like this. All year long, you've got temporary accounts for income and expenses. At the end, we need to tally everything up. So we transfer those balances into their final accounts to basically zero out the scoreboard for the year and see what the final score is, profit or loss. So what's the whole point? It's all about answering that one question that keeps every business owner up at night. Did we make money? This whole process gives us two super important numbers, gross profit and net profit. And those two numbers tell the owner exactly how the business really did. Okay, let's hit our first route, the perpetual system. I like to call this the expressway, and for good reason. It's built for speed and real-time info. Because you're updating your books with every single transaction, the year-end closing process is way more direct. Now, here's the cool part about the perpetual system. Every single time you sell something, the system instantly does two things. It records the sales price, and at the exact same time, it records the cost of that item in a special account called cost of sales. This gives the business a live, minute-by-minute look at its profit and what's actually flying off the shelves. Because of all that real-time tracking, closing the books is so much simpler. You just figure out your true sales after any returns, that's your net sales, then you get your true costs after any discounts, your net cost of sales, and boom, you just transfer those two clean numbers straight into the trading account. Easy peasy. All right, time for path number 2, the periodic system. If perpetual was the expressway, think of this as the scenic route. You end up at the same place, but there are definitely a few more stops along the way, mainly because you save the really big calculation for the very end of the period. See, with this system, there's no live cost of sales account. Instead, you've got this whole family of accounts to keep track of things. One for purchases, another for purchases returns, you get the idea. The business only finds out the true cost of everything it sold after someone grabs a clipboard and physically counts every single item in the building. This whole end-of-the-year approach means there are more steps to closing. You still calculate your net sales, of course, but then you also have to figure out your net purchases. From there, it's a multi-part process. You take the inventory you started with, add everything you bought, and then subtract the value of the stuff you have left. It's a full-blown calculation, not just a simple transfer. Okay, this is it. This is where our two paths finally meet. The trading account is where we calculate gross profit, and it's the perfect place to see a direct side-by-side showdown of how these two completely different systems work. Let's look under the hood at the actual accounting entries. Over on the left with the perpetual system, it's so clean, right? You've got sales and cost of sales moving into the trading account. Simple and direct. But now look at the right. The periodic system has a whole conversation happening. It's moving purchases, shipping costs, and both the starting and ending inventory. It's just a much busier process. So let's just boil it down. This makes the difference crystal clear. To get to gross profit, the perpetual system really only needs two main pieces of information. But the periodic system, it has to assemble 5 different pieces of the puzzle just to see the exact same picture. Let's make this real with an example. For a business called Gina Traders using the perpetual system, one single number, 108,000 Rand, for their total cost of sales gets transferred over. That's it, one step, and that part's done. But for that same company using the periodic system, it's a whole different story. The process involves a bunch of different numbers. They've got to transfer their opening inventory of 7,200 Rand, deal with all the purchases, and then record their final closing inventory of 5,250 Rand. You can just see how much more manual that calculation is. So after all that work to figure out gross profit, we finally made it to the finish line. And here's the interesting part. From this point on, it doesn't matter which path you took to get here. The rest of the trip to find your final net profit is exactly the same for both. And that's the key takeaway. Both systems funnel their gross profit number into the exact same final process. You add in any other income, you subtract all the other business expenses like rent or salaries, and whatever is left, your net profit, gets transferred to the owner's capital account. The only difference was how you got to that gross profit number in the first place. So, after all that, you might be asking, why do we even care about these two different paths? Well, because the choice between them has huge, real-world consequences for how you actually run your business day to day. So here's the final breakdown. The perpetual system gives you powerful, real-time information, but yeah, it usually needs more advanced automated tech. The periodic system is simpler, relying on that manual count, but you're kind of flying blind until the end of the period. And it all boils down to this: is your accounting built around that one powerful cost of sales account or a whole family of purchases accounts? And this choice, it isn't just some boring accounting detail. It's a major strategic decision. Think about it. A small local coffee shop might be totally fine with the simplicity of a periodic system. But a huge online retailer shipping thousands of things a day, they absolutely need a perpetual system to keep from running out of their most popular stuff. And that brings our little journey to an end. Whether you take the high-speed expressway or the winding scenic route, both will get you to your profit destination. So the real question to ask yourself is, which path is going to give your business the kind of clarity it needs to navigate the road ahead and really succeed?